Morning everyone, welcome to Ainsley News. It's Tuesday, the 12th of April. Crypto Tuesday today, so we're talking Bitcoin of course. HODLer dominance remains in drawdown. The Bitcoin market pulled back this week after a breakout from the multi-month consolidation range. Prices have thus far struggled to find sustained upside momentum, and there are indications of a modest volume of profit taken by market participants. Let's dive into the BTC market's on-chain dynamics. A powerful set of tools for tracking the cyclical nature of Bitcoin cycles is on-chain activity, broadly described as the utilization of block space via active network participants sending transactions and settling values. Metrics that describe this include active addresses, entities, transaction counts, mempool congestion, and fees paid. Across this suite of metrics, it's hard to find many observations that suggest the network user base is recovering or growing strongly. The number of active entities, Nodulus to daily active users, remains within the bear market channel that has been established over the last 6 years. That said, the current active entity count of 296,000 per day is at the upper end of this channel, and a sustained expansion high would be constructive. Transaction counts are also relatively lackluster, currently at around 225,000 transactions per day, which is similar in magnitude to during the 2019 bear market. As with active entities, this metric has recovered from the lows of the collapse back in May-July 2021, but is a far cry from the hype cycle observed during bull markets. The result of this relatively low demand for Bitcoin block space is that there's little network congestion, and thus a low aggregate and transaction fees paid. Total transaction fees paid to Bitcoin miners have been languishing near all-time lows since May, supporting our observations above and today that the recovery on-chain activity is lackluster at best. Despite network transaction fees being near all-time lows, the competition in the mining industry continues to set all-time highs. The protocol mining difficulty has now reached a new all-time high, with each Bitcoin block requiring 122.78 zettahashes to solve. This would be equivalent to all 7.938 billion people on Earth, each guessing an SHA 256 hash 15.5 trillion times every 10 minutes to solve a Bitcoin block. That in itself is quite extraordinary. Competition in the mining industry is notoriously fierce, as miners seek to arbitrage the energy to BTC price ratio by finding the cheapest available sources of power and capital funding. As hash rate competition expands, ASIC efficiency and rig counts increase, and the revenue earned per hash is driven ever lower over the long term. Show you a few charts today, and they show this long-term trend, illustrating on a log scale just how competitive the landscape for acquiring the ever-declining Bitcoin reward is. Now to look at HODLer cohorts. Bitcoin long-term holders, or LTHs, currently hold 13.66% of the supply. That's at an unrealized loss, which is a sum approximately equal in magnitude to the amount of sell side they applied in the 2020 to 21 bull market. Long-term holder coins are the least likely to be spent and sold on a statistical basis, and it can be seen in 2018 and March 2020 that they have held through much deeper losses in the past. The proportion of long-term holder coins held at a loss reached over 35% of supply in the depths of previous bear cycles, which is 2.5 times more relative coin volume than we have in the current market. Short-term holders own far fewer coins compared to long-term holders. However, this cohort is seen as a marked jump in the profitability of late. As the market rallied out of the consolidation range, new accumulators, short-term holders, that acquired coins between $33,000 to $42,000 have returned to an unrealized profit, showing that investors saw value in that price range. This is a positive development compared to the recent market lows of the 22 of January, where 100% of all short-term holder coins were at a loss. Improving investor profitability, especially in this more price-sensitive short-term holder cohort, tends to lower the probability of panic-driven sell-side pressure. The Bitcoin market has pulled back this week after a breakout from multi-month consolidations. Prices have thus far struggled to find upside momentum. There are indicators of a modest volume of profit-taking by investors. Especially across on-chain activity metrics like transaction counts and active users, the recovery has thus far been relatively lackluster and continues to suggest Bitcoin is a HODLer-dominated market with few new investors flowing in. That said, network profitability has improved, indicating significant reaccumulation took place since January. The aggregate profitability of the network remains in a far healthier position compared to prior bear cycles. There we go, some great insight there for BTC. If you're a holder, keep holding. Jump over to nzwealth.com.au for all things crypto, nzbullion.com.au for all things physical, and goldsilverstandard.com for our own cryptocurrency built and backed by real gold and silver. Enjoy your Tuesday, everyone. We'll catch you tomorrow for more news.